The United States and China have agreed to a temporary tariff rollback, signaling a potential thaw in their trade war. The agreement, reached on May 12, 2025, offers a 90-day pause in escalating tariffs. The U.S. will lower tariffs on Chinese goods from 145% to 30%, while China will reduce tariffs on U.S. imports from 125% to 10%. This swift action underscores the urgency felt by both nations to stabilize their economic relationship. However, certain levies like those related to fentanyl remain in place. This pause represents a significant development, creating a window for dialogue and potential resolution. The coming months will be crucial in determining whether this truce can pave the way for a more stable trade relationship. The world's two largest economies are now at a critical juncture. The announcement of the tariff rollback was met with optimism across global financial markets. The U.S. stock market experienced a significant rally, with the S&P 500 jumping by 2.6% and the Dow Jones climbing by 2.2%. The Nasdaq Composite Index recorded a substantial gain of 3.5%, highlighting positive sentiment in the tech sector. Apple saw a remarkable 6% surge in its stock price due to its significant exposure to the Chinese market. Other multinational companies like Amazon, Dell, and Nike also witnessed notable stock increases. The positive market reactions underscore the interconnectedness of the global economy and the influence of U.S.-China trade relations. The tariff rollback agreement is only a temporary measure, offering a chance for constructive dialogue. The ultimate goal is to address the underlying trade imbalances and economic concerns. U.S. Treasury Secretary Scott Bessent and Chinese Vice Premier He Lifeng will lead these crucial discussions. These talks aim to find common ground on issues like intellectual property rights and market access. However, significant challenges remain, such as concerns about currency manipulation and industrial subsidies. The temporary nature of the tariff rollback injects uncertainty into the future of U.S.-China trade relations. The 90-day window is short, and the possibility of tariffs being reimposed looms over the process. Businesses and investors are left in a state of limbo, unsure about the long-term stability of the trade environment. The outcome of these negotiations will be pivotal. The temporary tariff rollback marks a potential turning point in the U.S.-China trade relationship. The 90-day pause offers hope for a more stable trade environment, but cautious optimism is essential. The positive market reactions reflect relief, but underlying issues remain largely unaddressed. The coming months will be critical in determining whether this truce can evolve into lasting peace. Successful negotiations are paramount, requiring compromise and common ground. A comprehensive trade agreement would foster economic growth and stability, while a return to escalating tariffs could disrupt global supply chains. The world is watching closely as the U.S. and China navigate this delicate phase. Only time will tell if this truce marks the beginning of a new chapter, or if the trade war will resume.